Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Wednesday, February 1st, and we've got a few economic news releases scheduled for today. Some of the bigger ones will be later this week with the Bureau of Labor Statistics releasing the jobs numbers, so we know that will be important. But today we'll see the ADP, so we'll jump right into the ADP unemployment or ADP employment report for January. And back in December, rather, we had 292,000 jobs that were created according to ADP last month. And for January now, it was 170,000. So not bad for beginning of the year, but obviously we'd like to see more jobs created. We need at least 300,000 or more to show some dent into our unemployment rate. Next item to note is manufacturing. The ISM for January. Back in December, we had 53.1. We figured it'd jump up a little bit, like 54.5, and came up pretty close to forecast of up 1%. So that's pretty good. Manufacturing showing some growth right there. A little bit of steam heading into the new year. And then the construction spending, we have for December, we have 0.4%, and we kind of figured it dropped down a little bit, and it actually went up to 1.5. So construction spending went up, so that's all good news there. All right, so we'll go ahead and jump over to the whatchamacallit, to the headline news. And basically, the stock market's up. So that's been kind of first this week. This week has been kind of bad on the stock market. A lot of it has to do with positive manufacturing numbers for globally, and the U.S. still showing some signs of growth. So that's kind of positive news. They're feeling a little bit optimistic. So that's part of what's making up the stock market. And then also some investors are feeling a little optimistic over Greece coming to an agreement with their creditors. So they're kind of thinking that may not be the best for the bond holders of Greece, but it's better than them defaulting. So it looks like there might be some signs of them actually coming to a conclusion with their agreements, hopefully in time for the bailout in March. So the next scheduled payments, rather. So let's jump over to see how this is all playing and a factor into the bond market and see what interest rates are doing. We're kind of in a sideways pattern here. We closed up yesterday, and we're kind of basically we started the day off with down 3 basis points. Now we're up about 9 basis points. We're up slightly more than what we were yesterday. We're up at 103.94 currently this morning, and again we're kind of in a sideways pattern. I think they're kind of waiting for some big news. Again, jobs numbers could come in and surprise people, and that's, again, we're still waiting to close the gaps as we had from Thursday to Friday last week and Friday to Monday. As we mentioned, we have two pretty big gaps, and at some point some good news will probably drop the bond market a little bit and rates will go up slightly. But right now rates are good, about the same where we left off yesterday, and you guys have a good day. So no, rates are better today, and catch you tomorrow. And also, if you're on the website, please go ahead and subscribe. Have a wonderful day.